And furthermore, I'm going to go through how the selling process is going to work on your UI.
He does a terrible job explaining how the selling process is going to work, but we're going to listen to him, and then I'm going to show you how the selling process is going to work.
You'll be able to see here's very, very soon, as soon as the development team launches this new contract, a place where you can put coins up for sale, and you'll be able to do it directly from the UI. And what this is going to do is it's going to put you in a queue with other people in the community that also want to sell.
All right, so this is what you call OTC. I want to go over OTC with you right now. I want to talk about OTC and how OTC works in crypto. So we're going to talk about OTC, and then you're going to listen to this. They never mention OTC, but that's what this is. What is OTC? Over-the-counter trading desks play an essential role in the crypto industry, but few understand why they're important, how they work, what separates one from another. We want to provide you information on how it works. Similar to their counterparts in traditional finance or DeFi, OTC desks deal with volumes. So what OTC does is instead of you having to go from an exchange, there are two basic ways: an exchange and over the counter. So what are OTC markets? In an exchange, if you go to Sushi Swap or Pancake Swap or whatever swap you've got, Quick Swap, you're exchanging and there's a liquidity pool. Now, what they lack is they lack liquidity in their liquidity pool. Now, why do they lack liquidity in their liquidity pool? Well, because if we take a look, they are selling the Ethereum-based energy coin for $11.18, and the Polygon-based energy coin,
Okay.
and the Polygon-based energy coin is $454.04. So what OTC allows you to do is it is a trade that happens directly between two parties. So what's going to happen is if you want to sell your energy tokens this way that Alan is describing, and again, he has not described this, he will not describe this, but I'm going ahead and I am describing this for you, you will be selling from person to a person. So you will list your coin, you will list how much you want to sell your coin for, and someone will have to buy your coin. This is not magic, you're going to sell your coin. The OTC desk happens directly between two parties, with one of those parties actually being a desk, a business dedicated to the buying and selling of a particular asset class. Two parties agree on a price and then work out the transfer between themselves. They are building a contract to allow you to say, I want to sell you energy, and we're going to say the energy they're selling is going to be on the Polygon side. I have some energy worth $454.04 a coin. And I want to sell it to you. Well, if I want to sell that energy to you that's worth $454, well, you're going to want to buy it for less money. How much less? Nobody really knows, but here's the thing. If you can buy the equivalent coin for $11.18, which they're clearly going to say in a few minutes that you actually can, and they can't stop that because the contract's already written, then why would you ever pay any more than $11.18 for a coin that someone has that's $454. So I could offer like $9 to buy a whole bunch of coins from someone. Now, the person who's selling is not going to be very happy selling a $450 asset for $9, but that's exactly what OTC is and how OTC works, or over the counter, where two parties agree on a price, work out the transfer of assets, which is what happens in a smart contract. And what's important is this stabilizes the price. When you are trading person to person, you're saying, I'm going to give you US dollars, I'm going to give you USDC on Polygon, or I'm going to give you Matic on Polygon. You are agreeing and you're doing a handshake saying you're going to give it for that amount. It never hits an exchange, so the price never changes. Why they're doing this, this is the main goal, is so that people can sell a boatload of coins from person to person without changing the price on the main exchange, but they have to be willing to take an amount. They have to agree. So here's where it comes down to. Again, remember, energy on Polygon, which is where everybody's staked right now, is $454 a coin. Energy where you can buy it right here is $11.18 a coin. Why would you ever pay more than $10 a coin here to actually own these coins? Valid question that I'm asking. I'd love a valid answer. Again, nopantsprofits@gmail.com if you have an answer for what's going on there. But let's go ahead, let's listen back. But this is an OTC market where you're pairing up a seller with a buyer, and a seller is going to have to continually drop their price until a buyer is interested in making that purchase. So let's go ahead, let's go back and let's listen here to the pitch.
All right. And there's two ways of approaching this. One would be first come, first serve. And I think everyone has come to the realization that that's going to do nothing but provide a very over-competitive and possibly damaging race and some people with.
So the second option is a race to the bottom. So if you don't have first come, first serve, you have race to the bottom, but we'll see.
Access to more information, would know exactly what time to get out, and other people maybe a few minutes late, and other people with a lot of coins and that's just not going to be a fair process, nor is it going to be something beneficial to the community, right? So instead of doing that, we're going to create a contract that's going to be accessible directly off your UI, and you can put.
The UI is the website you're using right now for doing this, for staking and everything like that. And again, this is called an OTC, or over-the-counter contract. They will never tell you that's what it's called. That's what it is called. And they're going to allow you to list your coins for sale to other users. And you're going to have to price it low enough so someone's willing to buy it. And they might say it's only worth $9, not $453.
Your offer, the number of coins you wish to sell, as well as the price you're willing to take. And it's going to be a very simple process. To start with, we're going to take 20% of the liquidity on Polygon, and we're going to put it into this contract, and we're going to go ahead and get. And by the way, this liquidity is coming to the contract, so you're going to be able to put your orders in, what you want to sell at, and keep in mind, it's going to be not on the first come, first serve basis, but literally who's offering at the lowest price. So
race to the bottom. You're all like, oh, I'm going to get liquidity. I'm going to get out of here. Alan admits this is a race to the bottom. Think about that for a second. OTC, race to the bottom, person to person. This is an OTC exchange. What a crypto OTC is the trading of crypto assets between two parties. Trade can be crypto to crypto, crypto to fiat. With all OTC markets, there's always a dedicated trading desk, which is going to, there's always a dedicated trading desk, which is going to be used by the smart contract that's going to be on your UI or on the screen that you actually manage your staking on. And yeah, the idea is it's person to person, and what it won't do, it won't move this price. This price has already taken a nice, oh God. Yeah, it's already taken a really nice, there was a time when this was worth a lot more than it was today. So we can even go by days. Let's refresh it. We'll go by days. We can kind of see. There was a time when this was worth a lot more than it was actually worth overall. But yeah. Oh God, yeah. Yeah, there were times. There were times that it was worth $600-700, and as people try and sell off, so why they're trying to go with this over the counter is it stabilizes the price. And what they're going to say later on is eventually these two prices, the price on Polygon and the price on Ethereum, should grow together. But that's a big eventually. But let's continue listening here.
And so those people get done first, and also it'll be weighted so that the least amount of pull to the liquidity contract will go first. What this does is we will work through over the next month, 2 months, 3 months, 4 months, through all the people that need liquidity in an orderly, systematized.
So this is no longer DeFi. You are buying directly on their internal exchange. It's like a stock exchange. It's not like a stock exchange. It is a stock exchange. You're exchanging the stock in this coin in a centralized exchange. We have gone from DeFi to CeFi. This is a centralized finance, which must be, in the United States, say with me now, regulated. So they've created an OTC desk. Most OTC desks, because I've dealt with OTC desks in crypto before, require you to be a qualified investor. So in order to buy OTC, you do have to be a qualified investor, meaning you have to have over $1 million in assets, not including your primary residence, make over $250,000 a year for the past 2 years, with the expectation to make $250,000 a year or more going forward, or make $350,000 a year as a couple, or $400,000, depending on the exact rules, or have a financial license of some sort. So normal people cannot use an over-the-counter desk, just to be perfectly aware. So now we've gone into whole other levels of legality to try and get liquidity here.
And fair way, okay? And the people that have an opportunity and the financial strength to hold for the long term will be able to benefit as well and get
Right, because you can buy it for less. If you want to hold it for long term, you can buy it for less than market price. Doesn't move the market price, doesn't move the market price down. So that is what an OTC market is.
the opportunity if they want to do the same. So this is the process. It's, you know, it's a consensus. It's not.
Prove that it's a consensus, Alan. You're just saying it's a consensus. You haven't read anybody's emails, you haven't read anybody's comments, you haven't read anything like that. You're saying it's a consensus, and everybody's just taking your word as cult leader, cult dictator, that it's a consensus. No, it's not.
What any particular individual wants, but it's the best, fairest available method, okay, to provide the.
To only sell what people are willing to pay for it. So very clearly, you're not getting out. I want to be, I hate to say this again. You're not getting out this way. It's allowing the ability for someone to buy the coin. Why do the desks exist? How do all these desks work? It's allowing somebody to buy the coin at what price they believe it's at, not on an exchange. So now we are in CeFi, or centralized finance. We have essentially become full circle. And it's funny as hell. But NRG has now become the community bank because it's an actual bank with the bank itself selling shares in itself on its own securities market. OTC, or over the counter.
Liquidity. Now, it will take us a little bit of time here to get the new contract built. Provided that everybody, there isn't any substantial group in the community that is against it. And since we've already kind of have support through emails and communication that the huge.
We're just going to go forward anyway. We don't have to prove it. We're a cult. What we say goes.
Vast majority of our community is for these proposals and for this. We will go ahead and deploy that as soon as practically possible, and hopefully, those of you that are really in need there's many people in the community that have medical conditions. There's other people with real crisis. You'll be able to.
If someone's willing to buy your coins for below market value and above the value of the Ethereum side, because I don't understand why someone would
get liquidity in a fair way, in a fair manner. Okay. So that's the first.
But remember, why there's no liquidity is because no one else is joining, and that is the definition of a Ponzi scheme.
Announcement, and that's kind of like,
and just translating, liquidity means why nobody can leave is because nobody new is coming. So nobody new is coming, so nobody can leave. That is literally, that's just understand what you're dealing with here. You are dealing with a Ponzi scheme. Here we go. A Ponzi scheme is a form of fraud that lures investors and pays profits to early investors with funds from more recent investors. Named after Italian businessman Charles Ponzi, the scheme leads victims to believe profits are coming from legitimate business activity, products, sales, or successful investments, or royalties on an NFT. And they remain unaware other investors are a source of funds. Ponzi scheme can maintain the illusion of sustainable business as long as new investors contribute new funds, and as long as most of the investors do not demand a full repayment and still believe the non-existent assets that they are purported to own. Ooh. If you've been watching for 2 hours and 14 minutes, it's pretty much the definition of what you've been watching here. But we'll continue on. We've got just a couple minutes left in the scheme of things. 31 minutes left. I'm going to try and talk a little bit less, but I wanted to tell you all about OTC.
I would say not the exciting part, but it's the least exciting part. The next part, and we will, once the new UI is up, we'll have another call.
The way that normal people can click and do this, they're going to explain to people how to do it once they show people how the OTC desk is going to work. That's all it is. It's an OTC desk. They don't need liquidity for this or anything. You're just selling person to person.
All of the transactions will be posted, so people will be able to see what wallets, who got. It'll be all on the blockchain. Who sold, what price, what amounts. So everything will be transparent. Okay. The next thing that we're gonna
but no longer DeFi.
And what we're gonna do is to drop everybody that has at least 25 coins or more, or a 500 coin amount in their wallet. very, very soon we will drop a